As we find ourselves grappling with the persistent challenge of elevated inflation rates, it's worth reflecting on the intricate tapestry of economic forces at play. The latest figures released on Friday paint a sobering picture, one that demands our attention and invites us to delve deeper into the complexities that underpin this vexing scenario. The Personal Consumption Expenditures (PCE) data, a metric closely watched by the Federal Reserve, revealed an unwavering annual inflation rate of 2.7% in April. This figure, while marginally above the Fed's target of 2%, was in line with economists' expectations, a small solace amidst the tumult of rising prices. Yet, the core PCE, a measure that strips away the volatile components of food and fuel costs, paints a starker portrait. At 2.8%, this metric serves as a stark reminder that the inflationary pressures we face are not merely transitory blips, but rather deeply entrenched systemic forces that demand our unwavering attention. As we ponder these numbers, it's worth acknowledging the profound implications they hold for the broader economic landscape. The Federal Reserve, that venerable institution tasked with safeguarding the nation's financial well-being, finds itself at a crossroads, forced to weigh the delicate balance between taming inflation and fostering economic growth. The impending June 12 rate-setting meeting looms large, with Fed officials expected to signal their intent to maintain a watchful eye on incoming data before considering any adjustments to the current 23-year high interest rate range of 5.25 to 5.5%. This stance, while prudent, underscores the gravity of the situation and the immense responsibility shouldered by our monetary policymakers. Yet, amid this sobering backdrop, glimmers of hope emerge. The muted gains observed in U.S. stock futures following the release of the PCE data, with the S&P 500 and Nasdaq 100 futures inching upward, suggest a tempered optimism among investors. The policy-sensitive 2-year Treasury yield, a barometer of interest rate expectations, held steady at 4.93%, while the benchmark 10-year yield dipped slightly, a subtle nod to the potential for future adjustments. As we navigate these turbulent economic waters, it's worth reflecting on the broader societal implications of persistent inflation. The erosion of purchasing power, the strain on household budgets, and the potential dampening effect on consumer confidence are all factors that cannot be ignored. Moreover, the ripple effects extend far beyond the realm of personal finance. Businesses grapple with escalating costs, forcing difficult decisions regarding pricing, staffing, and investment. The delicate balance between profitability and affordability becomes an ever more precarious tightrope to traverse. Yet, it would be a disservice to our collective intelligence to view this challenge through a purely economic lens. The human dimension of this predicament cannot be overlooked. Financial strain breeds anxiety, uncertainty, and a sense of insecurity that permeates every aspect of our lives. The psychological toll, while often overlooked in the realm of economic discourse, is a potent force that shapes our collective well-being. As we confront these realities, it's essential that we approach this challenge with a spirit of empathy and compassion. For too long, the discourse surrounding economic issues has been dominated by the dispassionate language of statistics and models, often failing to capture the lived experiences of those most profoundly affected. Perhaps it is time to reframe our dialogue, to infuse it with a deeper understanding of the human condition. By acknowledging the struggles of families striving to make ends meet, the sacrifices of small business owners grappling with escalating costs, and the anxiety of retirees watching their hard-earned savings dwindle, we can forge a more inclusive and nuanced approach to tackling inflation. In this pursuit, we must reject the false dichotomy that pits economic growth against financial stability. For true progress to be achieved, we must embrace a holistic vision that harmonizes these seemingly conflicting objectives, recognizing that the well-being of individuals and the prosperity of nations are inextricably intertwined. As we chart our course through these uncharted waters, let us draw strength from the resilience that has defined our nation throughout its storied history. Just as we have weathered countless storms before, we shall emerge from this challenge stronger, wiser, and better equipped to confront the economic trials that inevitably lie ahead. For in the end, it is not merely the mastery of numbers and models that will guide us to calmer shores, but rather the collective resolve of a people united in their pursuit of a more equitable, prosperous, and secure future for all.